So the way I think about it is digitization is happening across the street. Vida specifically is focused on distribution, but institutions, depending on their own profile and their client base, are obviously focusing on committing resources that suit their specific objectives. Competitor platforms will continue to exist across the banks and fintech space, although usually you will see fintechs focus on a specific product set, whilst banks are looking to offer a broader range.
Hi, I'm Eloise Goulder, head of the Data Assets and Alpha Group here at JP Morgan. And today I'm so pleased to be joined by Gurps Kharaud, who is Global Head of Equities Digital Markets, and also Franc Chioccola, who is Head of Vida Portfolio Solutions, both here at JP Morgan. And I'm really looking forward to hearing their perspectives on the evolution of not only trading, but also portfolio management in this increasingly electronic and digitized world. So, Gurps, Franc, thank you so much for joining us here today.
Thanks, Eloise. It's great to be here.
Thanks for having us, Eloise.
So, Gurps, could we start with the bigger picture? To what extent are markets becoming more electronic and is trading flow becoming more automated? I think we all know that this has been the direction of travel for years. And in fact, we discussed this in a podcast with Kate Finlayson, our head of FIC market structure, about a month ago. But Gurps, from your lens, how far along this path are we?
So I think it's fair to say there's been a significant amount of change in this space, and it really continues to evolve. We've really seen electronic trading expand across all asset classes the investment firms offer today. To just give you a little bit of a stat as we begin, every one of the over 4,000 institutional traders who responded to our annual e-trading survey anticipates an increase in electronic trading in the years ahead. And that's in every asset class. Plus, it's not just the level of electronification. It's really about the pace and evolution of this trend. In terms of how far along we are, it's a really complex question because it varies across asset class. Just to take two businesses, if you think about equities, that's very mature, whereas in some areas of derivatives, we're just beginning on that journey. So it's a mixed picture, but really a dynamic one.
That's incredible to think that every one of those 4,000 clients that you surveyed expected an increase in automation and electronification over the years to come in all asset classes. So you mentioned, Gurps, that some asset classes like cash equities are already very far along this way, whereas others like derivatives cross-asset, less so. What are the barriers preventing those other pockets from becoming more digitised?
Some products are much more bespoke in nature. So that means that they don't lend themselves to the electronic trading side that you see, for example, in cash equities. That doesn't mean that they cannot be digitized. Now, what do we mean by digitization in that area? That means offering clients analytics, tools, transparency, capabilities where they can perform actions or understand about our products in a digital way. So it's not really focusing on the execution or where do I click to trade. It's really where can I actually explore the product, understand the product in a digital way.
That's such a good point that when we talk about automation of markets, it's not just at the point of trade, is this electronic or not, but it's also all of those different steps in the life cycle of an investment decision, including many of the pre-trade steps that can be automated. And I'm assuming that you're working in that space. I mean, how do you think about the trade life cycle?
So I think that the area that we are going to talk about the most is going to be in our portfolio solution space. The strategic index space is an area that we began our efforts. If you think about strategic indices, it's cross-asset. There's a lot of IP. There's a lot of complex drivers. And what we've really tried to do in that area is provide tools to let clients understand their investment performance and how those investments may behave under different scenarios. And really, over time, the platform has expanded considerably to include more capabilities, support more business lines. And it's not just our clients that are using these tools, but our internal traders and our salespeople. And what we find is that when you have got one digital solution which is being used by both the client and the internal bank, it really lends itself to effective communication. It means that they can see the same things, they can understand the same drivers. So we're getting away from the old days of a structurer hopping on a plane with a salesperson, producing a multi-page deck which is going through all these different elements. No, you can really answer the question that the client wants in a much easier, streamlined way because you're both looking at similar data sets or similar analytics on a common portal.
And it's interesting that you mentioned that the systematic indices space is the genesis, the start of your digitization work across the trade lifecycle, because we often hear from that group on this podcast series around the data-driven alpha-generating strategies that they're really focusing on creating for our clients. We've heard about the time traveler dataset. We've heard about the Quest dataset. And most recently, we heard from Jagadish Chalazani on all of their trend following strategies. So very interesting to hear that you're working closely with that business too.
Yes. How I see it is Jagadish and co are really bringing the IP, the ideas and the generation. And what we're building is the distribution of that. We're enabling clients to be able to explore these investments or these indices on our platform. So we partner really closely with our structuring team to make sure that we're bringing the IP of JP Morgan to our clients in the most effective way.
Thank you. And when I hear about your work and the systematic indices work in making analytical tools more transparently available to our clients, it reminds me of what we see on the investment decision side of the business, where investors really want research analysts to show their workings and make their analytics and their toolkits and their data sets available to investors, so that rather than the end client calling the research analyst or the salesperson back tomorrow to understand if the thesis has changed, they can instead ingest their data sets and their models to see this for themselves real time. And they can feed this into their processes systematically.
I think it's a very good point. So we try and tackle it the same way as well. So at the end of the day, people aren't as interested necessarily about the answer to the question. They want to understand the path to get there. And that's the approach that we've tried to take with our tool set that we've provided clients. We give them the tools for them to understand drivers, attribution, simulate different scenarios.
Yeah, absolutely. So we've spoken about the demand side in terms of the end investor wanting access to these analytical tool sets in a very transparent way. What about the supply side, i.e. from our side of the equation? As our tech stack evolves and as our cross-asset trading capabilities digitize, I imagine that our ability to create this integrated portfolio solution has also improved.
Yes, that's right. So as I said, we began in the strategic index space, and that wasn't by accident. The reason we began there is because it's cross-asset, and that meant that we had to lay a lot of foundations to be able to extract the right data, perform the right tooling. And it's amazing the parallels that you can draw across different asset classes.
Well, thank you so much, Gurps. I think you've really set the scene in terms of what our investing clients are asking for and what we are striving to do here at JP Morgan. But Frank, can I turn to you on the specifics? What tooling are we really creating to address this need?
Thanks, Eloise. When thinking about portfolios, we've distilled the capabilities into 4 major themes. You need to create, analyze, manage, and report. And what we've really focused on is delivering digital capabilities that support these events in a user-friendly and intuitive way. By doing that, we believe that we can offer clients enhanced collaboration, transparency, and efficiency. It not only empowers the client to self-serve, but also empowers salespeople to have higher value interactions with their clients. So first up, you create. Every portfolio has an event where a client needs to explore or generate a potential strategy. And what we do is offer capabilities that enable them to, say, hedge out a concentrated stock position, or perhaps create a cross-asset basket, and then backtest that and compare it. And that's where we come up to analyze. Whether it's pre-trade or post-trade, you need to give clients the ability, the data, to understand the drivers of performance and risk of whatever potential investment they may have. Next up, once they have invested, they're thinking about how do I manage this portfolio, whether that's the parameters of something systematic or rebalancing the actual weights in a pure client discretionary portfolio. And finally, we have reporting, where clients can get customized or templated reports that evidence the actions that have been taken previously.
It's such a good point about transparency. And actually, Jagadish Chalazani did make exactly the same point, that transparency was one of the key pillars to the systematic index business as a whole. The importance of providing that granularity of process, of workflow to the end investing decision maker?
So transparency is a key aspect of the platform. It offers information to the portfolio managers and capabilities around actioning decisions, but it also offers detailed information to risk managers and ops teams. The idea is to provide information both internally and externally to all participants to make sure that the right decisions are being made.
Your point about these asset management firms wanting transparency, striving for transparency within their organisation between the different functions, from the portfolio managers to the execution, to the risk management, to the operations, that is loud and clear from the conversations we have too. In fact, I'm thinking about Daryl Yarwich, Chief Risk Officer at Man Group, talking about leveraging common data within the risk management role as the portfolio managers used for alpha generation, and the importance of using common data so that you're all speaking to and understanding the same risks is so critical.
Exactly, Eloise. And Vida is our portfolio solution tool for clients and for our salespeople for delivering that transparency.
And you just mentioned salespeople. How do you think Vida changes the workflow of a salesperson? And what does this mean the salesperson of the future really does and embodies?
That's a really important point. Our approach has been about making things simpler, more streamlined, more effective. And that means equipping salespeople with the tools to help clients more effectively. A key aspect of the tooling that we've delivered to clients has really emphasized collaboration. Historically, we used to collaborate over email, over the phone, and now we're able to do that digitally. What we can do is we can create solutions and actually share them in an interactive format in real time in the same session. And that makes everything far more efficient and high value with the client. Before we wrote a single line of code or built anything, we conducted a significant amount of user research to help understand what clients' demands were, what problems they faced.
It reminds me of the Entrepreneur's 101, which is to solve a real-life problem and to be client-led. Also, we so often talk about the man versus the machine. You know, where is the machine and the automation and the data really leading versus where is the human heavily involved? And it sounds like, in your case, it's very much both. There's a toolkit that's heavily automated, but the client is ultimately the human who's interacting with that toolkit before coming up with any investment idea.
Yeah, I think it's interesting when you look at it from that angle. I wouldn't say that it's man versus machine. I think it's man and machine bringing something together, which is transforming something to just make things overall easier, quicker, faster, more transparent. When you're talking about the salespeople, or the trading, or the structure, we're bringing all of these people and all of these groups together to deliver something for the client. I'd say it's man and machine, making the process much more effective and efficient.
Such a good point. Man and machine, human in the loop.
I think the other part is about scale. So we're able to deliver a tool where you make it available to multiple areas of the organization. The barrier to entry actually becomes lower because we're not bringing a new tool every single time to serve a new purpose. And as a result of that, we've managed to tackle multiple areas of organizations, from the risk management to the portfolio management to the operations, in multiple asset classes, because we're not bringing a new tool every single time.
Totally. And everything you're talking about sounds so logical, that the client has this desire for a consistent toolkit that works cross-asset, that is very transparent, that they can use across multiple parts of their organisation, and that we are striving to deliver that. What's the wider landscape looking like? Are multiple other players here in the industry doing the same thing?
So the way I think about it is digitization is happening across the street. Vida specifically is focused on distribution, but institutions, depending on their own profile and their client base, are obviously focusing on committing resources that suit their specific objectives. Competitor platforms will continue to exist across the banks and fintech space. Although usually you'll see fintechs focus on a specific product set, whilst banks are looking to offer a broader range. But digitization itself is happening in a multitude of different ways across the street. In fact, clients have a range of offerings available to them, whether that's from banks or fintechs. They have a lot of choice. And so it's our job to provide the best solution to stand out from that pack.
That's so interesting. Thank you for putting everything we're doing into context with the wider industry landscape. And this space is rapidly evolving. So I guess that's today. But in time, the entire competitive frontier will continue to evolve. So, Gurps, can we come full circle back to you? I mean, it was so interesting hearing your thoughts at the beginning about the fact that markets cross-asset are continuing to become more electronic. And in many cases, like the cash equities world, are already very mature and very electronic. But you mentioned that there are these barriers to digitization, and some of those barriers are clients wanting bespoke solutions. And when they want bespoke solutions, perhaps we can't provide that electronic trading service, but we can provide this tooling. And it's so helpful to hear about the ways in which you're doing that through Vida. So, Gurps, as we look to the future, blue sky thinking, markets do continue to become more electronic, more digitized. Where do you see this going?
This is a very good question, Eloise, and I'm looking at my crystal ball as I'm trying to answer this one for you. I'd probably answer that from the other way. So if I was to go back and we were to say 5-6 years ago, I think we'll be amazed by the amount of change that we've seen in that time. I think clients' adoption of these tools is really fascinating to see. They want to interact with us with these digital tools. So when we look 5 years ahead, the only thing that I'd probably summarize it in is more development, more capabilities. We're going to continue to invest, continue to develop, and see much more electronification across the life cycle of the transaction.
Well, thank you so much, Gurps and Franc. This has been so helpful and interesting to hear your perspective on the evolution of markets. And from what I'm hearing, development never stops, but scale is also so critical to create a centralized digital platform that can be leveraged across asset, across different functions, and will enable us to continue to service our clients as they evolve. And there are so many parallels between everything you're doing and the evolution of data consumption and data demand that we're seeing from our lens as a team. So I really appreciate you taking the time to run through all of this with us.
Thanks so much. It's been an absolute pleasure.
It's been great to be here, Eloise.
Thank you. And thank you also to our listeners for tuning in to this bi-weekly podcast series from our group. If you'd like to learn more about Gurps and Franc's work and the Vida platform, then please do reach out to your sales representative or explore Vida on JP Morgan Markets. Otherwise, if you have feedback or if you'd like to get in touch, then please do go to our team's website at jpmorgan.com/market-data-intelligence, where you can always reach out via the Contact Us form. And with that, we'll close. Thank you.
Thanks for listening to Market Matters. If you've enjoyed this conversation, we hope you'll review, rate, and subscribe to JP Morgan's Making Sense to stay on top of the latest industry news and trends. Available on Apple Podcasts, Spotify, Google Podcasts, and YouTube. The views expressed in this podcast may not necessarily reflect the views of JP Morgan Chase & Co. and its affiliates, together JP Morgan. They are not the product of JP Morgan's research department and do not constitute a recommendation, advice, or an offer or a solicitation to buy or sell any security or financial instrument. This podcast is intended for institutional and professional investors only and is not intended for retail investor use. It is provided for information purposes only. Referenced products and services in this podcast may not be suitable for you and may not be available in all jurisdictions. JP Morgan may make markets and trade as principal in securities and other asset classes and financial products that may have been discussed. For additional disclaimers and regulatory disclosures, please visit www.jpmorgan.com/disclosures/sales and trading disclaimer. For the avoidance of doubt, opinions expressed by any external speakers are the personal views of those speakers and do not represent the views of JP Morgan.